Yes guys, welcome back to a brand new weekly market outlook brought to you by Funding Frontier and myself, Ryan Cruz. You know who I am by now. We'll be going over gold, USD, going over the weekly, the daily, the 4 hour, the hourly, the half an hour, the 15 minute, looking at potential key trade ideas, potential key areas. I'll be looking over news events that will be affecting the US dollar during this week of the 10th of February 2025. So, jumping straight into it, as you can see, again, we have smashed the weekly analysis, the overall bias every single week for the last 3 or 4 weeks, and it has been absolutely insane. Again, last week we said if we do respect that previous low on the previous candle, which we did, we created this really nice bottom wick, respected the previous low of the previous candle. Then I said if you come up and break the previous highs, then I would expect gold to continue up into them all-time new highs, which is exactly what we did. So plenty of trading opportunities on that bull run. Again, the same concept applies, guys. Now we are getting into still obviously all-time new highs, but of course at some point we will have to have a pullback. Now, how do we know which way this is going to go? Are we going to go bullish? Are we going to go bearish? You have to be fluid in the markets, and you have to react to see what is going to happen on this next candle. So again, if we start up the candle, right, let's just change this color quickly. Restart the candle, and we start a very, very small bottom wick, or even no bottom wick, right, and then we start pushing bullish, break the previous wick high, that is when I'm going to expect a bearish push. Because we've broken the previous high very early in the candle, didn't really create bottom wicks. Then we're going to come collect that bottom wick, and then start to push bearish, breaking its own low for the potential pullback on this bull run. However, what if we do continue up on bullish? Because we are heavily bullish. We would rather go bullish because we are on this huge bull run. If we zoom right out, as you can see, we're heavily bullish on the overall trend there. So again, the best way to know if we're going to be having that nice bull run again on this weekly candle, still closing above that previous resistance that we've formed. We've banged on about it multiple times, closing above this level, above this previous resistance, which we have done now for 3 weeks in a row. So again, we are to continue up on bullish. I want to see the price to open up, create that bottom wick, respecting the previous low of the previous wick, which we would do with the bottom wick, come up and then break this previous wick high, and then continue up on bullish, which was what I would ideally, preferably like to see, as we are so bullish. Now, how do we know where our key levels are going to be though? How do we know where our key levels are going to be if we continue up on bullish? Because, of course, we can follow the trend. However, looking left, we're all-time new highs. There's no data. There's no key areas to bounce off. There's no supports. There's no resistances. There's nothing to go off to suggest where we could reach. So you're just buying into blind sight if you don't know where to go. Now, the best thing to do, which gold reacts off $5 increments. So current price, if we break that previous high at around 2890, right? We break that previous high at 2890. Your first point of call is going to be 2895, around that level. And then if you continue up on bullish, then you're going to go 28,910, and so on. So each time we got from $5 increments, 50 pips up, that's going to be your target points, because you're reacting off price rather than previous data at this point. So without further ado, guys, let's get in to the further analysis of the daily. So based off the daily, we have now created a new resistance on the daily, which is somewhat nice, some nice market structure. We did on the Thursday, we did break the previous daily low, which we did say on the daily analysis as well, because we had that very small bottom wick. Started breaking our own low, broke the previous wick. However, we did have that rejection wick, Broke the previous low, had the rejection wick, so we were expecting that further push up. Again, we then obviously respected this previous resistance rather than closing above again. So we have created this new resistance, which is somewhat nice. So again, on the daily, if we do get a closure above 2867.394, I will be looking for them buys and looking up to go on them $5 increments. So again, 2880. Then we'll be looking at 2885, then 2890, 2895, etc. You get the idea. So some really nice benchmarks for you on the daily there. Keep going up in them $5 increments. However, what about, we have created this within these 3 candles, create this minor support. We'll go down in the lower time frames at this point, but again, if we do get the closure below 2851.390, I will expect at least, sorry about that, I will expect at least the wick fill that we have here to be filled at this level here. 2851 down towards 2834. This wick fill to the left will be getting filled if we get that closure below. And then I'll be looking for price to continue on down, hit that previous resistance at 2770.251, then coming down to the previous support at 2838.789 if we get them closures below. Now if we come down to the 4 hour, I get more of a cleaner picture, which is really, really nice. It matches up with daily wick fill perfectly as well. What I'll be doing is just slightly adjusting my resistance to 2873.758. And the same rules apply, going up in $5 increments. Of course, initial point of contact there on the TPs will be looking at the wick fill, and then again going up in the $5 increments, like we previously mentioned. 2,900, again coming into them all-time new highs, 2,905. Again, if we get that closure below, our support level matches up perfectly on the daily with the 4 hour. Initial targets for the wick fill. Then we'll be looking at next targets at 2812.967, sorry. Then coming down to this previous resistance, just tighten it up a little bit. So as you go down in the time frames, you just tighten it up a little bit to key areas there. So again, I'm not saying if we get the closure below, then we're going to smash all these TPs straight away. I'm saying the initial target is 2834. Then perhaps on the Tuesday, you'll be looking at next targets at 2812.967. As long as you keep closing below these key areas. If you get to this key area, let's say candle closes below and we reach here, right? How far away are you from the next support? Again, then you've got you've got 10 pips away. That's not a good idea to take the sell there. Perhaps the next candle, you might print a bullish at support here, right? You haven't taken the trade yet. Then the next candle then breaks below. And then looking left, have we got clean candles? Yes, then we've got clean candles coming down towards 2781.9595. So then it makes more sense. So then coming down to the hourly, the half an hour, and the 15-minute, really, really beautiful opportunities here. On the buy side, it absolutely looks clean. It looks so clean, the clean traffic. So marking out our most recent resistance, at 2863.243. Why do I like it so much? Because as soon as you can get a candle to close above this area, like so, you look left, beautiful clean candles. It is absolutely beautiful. Now, of course, if you do get that candle closure above, you don't just run the whole trade up to that previous TP. Take partials along the way. How do you know where to take partials? Just look at the previous data again, where price could potentially react, because it did react here before. Look. We reacted here. We reacted here. We reacted here. So this is a price where we've reacted off so much previously. I do like to say it has been wiped out, right? However, if you're going to get that closure above and to take partials along the way, this is a good area. So there's your TP1, 267. 2869722 if we get a closure above 2863243. TP1, TP2 again, just going to use that previous resistance there, and then TP3 I will be running it up to that previous resistance that way to the top. Then you go into all-time new highs. Now we do have that reaction point there because we've drawn out this line, right? We've drawn out this key area on a different time frame, on a higher time frame. Therefore, it is a point of interest where we could react. So leaving them in is very crucial as well when you're doing your weekly market outlook. How about for sales? Sales gets a bit more tricky because what have we got on the sales side? We've got whoa, we've got rejection wicks, rejection wicks, rejection wicks, choppiness. It's not clean. It's not very clean at all. However, you can use wicks as wick fills. So, if we do get a candle, excuse me, let's mark out the range, because if you could get a candle closure below, this is going to be very short-term sells, which may get wiped out early on during the market open. But if we get short-term sells below 2859810, because if we get a candle closure below, we have got 17-20 pips to the bottom of the bodies, and then we've got the wick fill for about 70 pips, right? So you can expect price to fill some of this wick, but again, it is a rejection area, so that's why you need the closure below. It's a rejection area for a reason, so these are going to be more risky sells. Safer sells, so there's your risky sells. Safer sells, looking left, we've got this choppiness area that we've just marked out. If we do get a candle closure below 28545, then we've got clean candles. We've closed below the rejection area. We've got the clean candles, just tighten that up a little bit, coming down towards 2851216. Then, as you can see, we've got a 34 pip range. So that's much more clean. However, what do we do after that? Because have we got clean candles after that? No. Choppy area. So again, this is going to be a no trade range in this section. Don't want to be trading into this range because it's very choppy. What you need to do is wait for a closure below that choppy range at 2848696. Then this is where the beauty comes in. Then we've got lovely clean candles. These are going to be the safest buys, safest sells, sorry. Because look at this beautiful range. Initially, 70 pips to the bottom of the body. Then we've got the wick fill for 140 pips. It's absolutely beautiful. So yeah, again, initial targets, taking partials along the way is going to be 2841941. Then we've got the wick fill matched up really nicely with that previous target there. TP3 2831449, and then look at it, beautiful. So again, below these areas later in the week, it's going to be perfect. Again, looking at the previous resistance where prices react before. Then we've got more clean candles coming down all the way down to our final target at 2812967. So yeah, we've got some lovely opportunities during the week next week. I'm really excited. Hope you enjoyed the video, guys. Please leave a like, subscribe to the channel as well. This is free weekly market outlook on gold every single week, giving you insights into what the next week's going to be. Just before we pop off, just whilst you're leaving a like on the video for me, just going to check over news. So Monday we're clean, no news for USD on Monday. Tuesday we do have Mr. Powell speaking. He's testifying at 3 p.m. GMT, so don't trade half an hour before 3 p.m. GMT, don't trade during 3 p.m. GMT, then just let news settle for about 15 minutes, 20 minutes, half an hour, then you can trade again. So don't advise trading the news. On the Wednesday, 1:30 GMT, we've got CPI, and we've got Mr. Powell speaking again at 3 p.m. On the Thursday, we have got PPI and unemployment claims at 1:30 p.m. GMT. Then we've got on Friday core retail sales at 1:30 p.m. GMT. So quite a lot of news next week, expected at the beginning of the month really. But yeah, just avoid these times and we should be all good to go. But again, hope you enjoyed the video, guys. That's over and out for me. Have a safe trading week. Looking to get some nice profits. If you can get 2 or 3%, perfect. 5 to 10%, even better. And I'll see you in the next one.